I guess it's back up and running, guys. Well, welcome back. We're going to try this again. Lost internet connection for some reason, but welcome back to Let It Grow Investing. I am Jeff. Thank you very much for being here. We're going to dive right into the market. I already went through all this before. You know what I'm going to say. Like, subscribe, share, do all those things, or don't, whatever. Anyhow, all things market, right? It's been crazy. We are looking at a week that has had massive sell-offs. We have had a lot of different pain out there with some of the things going on, tariffs and talks like that, political, geopolitical tensions. We've had a lot of different things that are really just selling off the market. We had CPI come out, that inflation read a little bit lower than what we were anticipating. So that helped, rally things back up on Friday. And if I showed you my Friday numbers, a lot of people would be like, what are you crazy? Why are you complaining? But if you look at the past 3 weeks, 4 weeks, it has been absolutely brutal. So I am going to go ahead and share the S&P 500. I already got that pulled up from last time. Again, right? 1 month ago, my birthday peaked out, right? Peaked out for me, and then we dropped. So 61.44 back on 219, and now we are at 56.38. We had dropped down to 55.22. So 10% off in the S&P 500. So I'm getting a lot of, maybe not even comments from you, but comments in different communities. What do I do, right? I just put in all this money. I just funded my IRA. I just funded my 401k. I just inherited money. I'm putting money in, and it is just getting obliterated. What do I want to do in this individual situation? And again, it's a case of, what is your long-term plan? Is your long-term plan, I just want to trade with this money? Well, you bought at a rough time, right? A lot of the writing was on the wall that things were going to get rougher before they smoothed out. So I can't think that if you're a long-term trader, or if you're a trader, yeah, that would be a painful time. But if you're a long-term investor, you have to look at this as an opportunity. I'm definitely looking at that for myself. So I haven't done a lot of selling. I did make one sell this week, kind of a snap judgment. I might be kicking myself. I might be writing options on the same play. We'll dabble into that in a second. Yeah, so there's a lot of different things going on, right? We had CPI, the inflation numbers were coming back lighter than what we were anticipating. So that, drove up some of the market on Friday. But yeah, that's from the 13th on up. Yeah, we've come back up a bit, but I mean, it's nothing crazy, right? It's just kind of where we were earlier last week, or even the week before, right? So it's nothing crazy. 2%. But when you look at it that, hey, we were already down 10, it's like, we're just getting a little bit back. Is it in the clear? Probably not. We probably still have some stuff and some hurdles to jump through. And we'll see what that means. But yeah, so I guess my point here is, if you are a long-term investor, whether you're new to this or if you're a veteran, probably more so than people that are new to this, I wouldn't go and just start selling at a loss simply to avoid a further loss, right? I think if you see the S&P in this 10% correction or even more, right? If I pull up year to date, we probably peaked out a little bit higher somewhere along the line. Maybe we did. Nope, that was pretty much it. It was my birthday right there, 61.47. And then, we see this big drop. We've got to go back and we got to zoom out, right? Like, we see these drops along the way. We see it back in 21. We saw it in 23, right? And then we rally up. So if you look at 4,323, you'd be kicking yourself right now that you didn't buy, or that you sold here. If it dropped down this little bit, you sold, and then it runs up to 5,000. You'd have been like, man, that was just silly. I could have had 25% gains if I simply would have just held on, right? And in the same breath, if you sold at 41.37 and it went up to 6,000, you really would have been kicking yourself, right? That is not that long of a time frame to lock in 50% of gains. So I don't know that the world is ending. I think there's a lot of fear. I think there's a lot of talk out there, but I don't know that we're getting into a recession. Could it be driven that way? Could things go really wrong? Maybe. I don't know that it's going to happen like that, though. Maybe that's just seeing the glass half full. I'm not too sure what you want to say about me as far as what I'm looking at. A lot of the numbers, a lot of the spending is still there. Yes, people are a little bit more fearful. And I think I want to cover that too, right? So if we look at a stock like United Airlines or Delta Airlines, right? We're going to pull up UAL real quick. So we're looking at this one. Let's go ahead this week and just look at the 5-day. Can we do that? We gapped down pretty big here, right? We got word from them that consumer demand was a little bit more skeptical in Q1, Q2, right? So we are kind of watching what's going on there. So we got a revised price target down to 104 from 140. Keeps the outperform rating. We're sitting at 73. So still at 104, that's great amount of upside here. And you're at a forward of, or that's trailing at a 7.4 on the PE. They're making money. A lot of the airlines are really starting to add on more costs. We saw that with Southwest this week. I think they are now charging for bags or check bags where they haven't before. But the story was that demand on the consumer side is lightening up. People are a little bit more fearful. They don't want to spend as much on travel. I'm sure this is in here somewhere as far as what's going on. We gather. Oh, yeah, I did a double take on my way to the baggage claim at Denver. Getting charged for your bags. Yeah, something along the lines of they're charging for bags. You can read into that if you're a big Southwest fan. Anyhow, the thought here is that demand is slipping. So maybe you don't want to buy a bunch of travel stocks right now, or maybe you do. Maybe it's a time where you just want to double down. You want to get in on some of these. You think Airbnb is going to be the great way to the future. Maybe it is a time where, hey, it's sold off. I don't think it's going to be as bad as what's predicted, so I'm going to go ahead and get in. But Delta was saying the same thing. We had numbers from February was much colder than anticipated, so there was a lot more either travel delays or people that just canceled their flights with snow from Maine down to New Orleans, right? So really a crazy month for air traffic as well. They don't know how to deal with it in the South, even further north. They don't really know how to deal with it, but nonetheless, a lot of that was impacted as well. So colder weather, brutal different weather conditions. Weather related problems were definitely on the radar for them, but also just a demand on consumer that was pushing, the actual airlines down. So they think it might be a one-off. It could have some staying power though. So a lot of different things that you can think about that. Do I want to roll in on something like an Airbnb when it sells off or United when it sells off? Do I want to think about those plays in a different light? Do I not want to buy like a Caesars or a Wynn or any of those Vegas properties and go ahead and buy something like a DraftKings or a Flutter, which owns FanDuel? You're still getting that gaming experience. You don't have to travel in order to do it. You don't necessarily have to go to the games, but you could throw $10 at the game and still be kind of, invested in it. And maybe not a proper investment, but you're invested in watching the game and for the result of the game. So maybe you go to your local sports bar or whatever that place might be. You're watching the game and you have something on the line, right? So some people are saying with DraftKings selling off that maybe it could be a time to buy DraftKings, right? It was up near 50. It was up near 53 on Valentine's Day, and now it's pulled back down to 37. So do you want to look at something like that when some of the consumer demand is slowing, but we're still also looking at more and more states getting legalized for sports betting, right? So DraftKings, and I believe, what's the ticker for Flutter? FLUT, right? Flutter Entertainment. And if I am correct, I know they have a lot of business in Europe. Let's just take a look there. They are in US, UK, Ireland, Australia, and international. They are, I know they own FanDuel, but I know I think like 60% of their business is around the world, right? Not US. So yes, you get a little bit more demand there. If we do have a recession, maybe you're a little bit more protected by having something that is more internationally held than what DraftKings might be. But I still think they're a number one operator in the US, and DraftKings is number two, I believe, at this. So do you want to buy something like that when some of the demand for other things are hit? This one is actually pulled back down. the gains that they've had have been pretty awesome. We got a 237 price on it right now. We've got a 35% upside, average price target being 321.97. DraftKings might not have a 30 some percent upside here, but let's take a look. 37. Oh no, they got more. They're at 53% upside. So maybe that could be a way that you play it. Protect some of that consumer demand. Maybe not rely on travel. Maybe not rely on people really spending to go out to win to do their gambling, but they can simply do some of their gambling on their phone, right? And it's a growing industry. We've got more and more states legalizing. So that could be a way to play something like a consumer demand problem, still have some international exposure through betting in other countries, or simply play like a DraftKings and you're a little bit more overweight in US, right? So that is one thing that I'm thinking. But if you are on that travel front, maybe that some of the different stocks that have sold off, whether it be a United or a Delta or an Airbnb or an Expedia, which I tend to like Expedia, right? I think that some of those could be a good way to play the trend as well if you have more of a timeline and maybe a little bit more wherewithal to know that it could get sold off, right? So I'm thinking that that could be a way to play it. We've got a couple of other things going on as well. I did want to take a look at Viking Therapeutics. We were looking at them when we were talking Eli Lilly, when we were talking Novo Nordisk. We were looking at them. And now I'm looking at Viking again. So I had sold out of this one because of the merger deal with Merck not buying Viking. I believe that's what had happened. I had sold out of this one because it didn't look like Viking was going to get what they needed. But they have just struck a deal with Corden Pharmaceuticals to go ahead and produce their tablets for them. So they have spent $150 million on a prepayment plan with Corden in order to produce 1 billion tablets of their weight loss drug. So the stock soared 8% on Wednesday after the maker of a promising weight loss pill secured manufacturing contract, removing an overhang that has weighed on the stock for some time. So this is huge for them, right? They've got a lot of different things going for them. They are in that growth stock phase, but they're in an industry that's a little bit more protected that I'd rather be in right now than something that is technically just straight growth. This gives a little bit more of that pharmaceutical lean, biotech kind of feel to it, where you're getting a company that is right on the cusp of something, and now they're kind of fitting some of the pieces of the puzzle together to where it looks like they're actually going to be able to do this. So that is a big change here for Viking. Sorry, I got cameras going crazy. I guess kids outside. I'm not too sure what's going on outside, but nonetheless, so Viking is looking better and better with some of the moves that they're making, and I think that could be a huge impact going forward. So Viking Therapeutics, I did go ahead and buy some more and threw that in my IRA. Sofi, I was talking to you guys about the fact that I like a lot of banking stocks right now as well, and fintech plays. Sofi signed a $5 billion loan platform business agreement with Blue Owl for funding, essentially. And it is on Thursday, they finalized an agreement worth up to $5 billion for personal loans with funds managed by Blue Owl Capital. This is the largest loan platform business agreement to date. Shares of SoFi were up more than 1% in recent Thursday pre-market activity. So they are getting a boost on this dealings. Man, I still think that SoFi is in a great spot with growth. I think they're in a good spot politically speaking, with Trump looking to shut down a lot of those student loan forgiveness things, and making sure that people like SoFi are getting their bills paid. So they've got a lot of loans that are getting paid now. They are also lending more than $5 billion on that personal loan type side. They have a lot of different things that are already getting approved, and they have a lot of the customers that were already looking for funding, and now they can go ahead and actually issue some of those loans out. So I think that kind of puts them in a sweet spot, right? They have sold off on a lot of different fears that are out there. I know that some people think that this thing could go lower, and I'm not going to say that it can't, but I do believe that for me, it's a worthwhile risk, right? It's a calculated risk that I believe that this thing is in a spot to where it can go higher. They've got a lot of pieces of the puzzle getting fit back together. Their user growth continues to grow. They are trading, it's almost like we've neglected the last 2 quarters in this price, and we've kind of given those back. And now sitting at $12, I think, yes, we're in a spot where this thing can be purchased, at least in my mind. So I bought this a little bit lower this week. I forget if it was a 10 or 11, handle somewhere around there. But how did I get the funding for this? Well, this is where I was saying I was going to tell you guys a little bit about what I did this week that might have been a little bit of a misstep, might have been a little early, or maybe even a little bit late. That's it could be either, right? It could definitely be either. I had made the call to sell off my Tesla shares. I was actually standing there with my dad looking at this one, tired of watching this thing sell off. And before I really started losing any money on this, I had set a limit sell and it just went right through the floor and it sold it. I'm not too sure that it was the perfect move to make, right? I'm not too sure that it was a perfect move. Why? Well, why did I sell it? I sold it not because I'm afraid of growth or growth stocks being in the crosshairs right now. I sold it from the standpoint that I feel like retail investors and the country at large is really anti-Elon at the moment. So as long as he's in charge, as long as he's involved with politics and Doge and Trump, I feel like he is in the crosshairs. So do I believe in Tesla? Yes, I do. I think that, without Tesla, and I understand that Elon did not find Tesla. He bought Tesla. I understand that. But without Tesla, the EV movement doesn't happen. You know, the Prius probably had it before that. I think some of the Honda vehicles did, but nothing really got mainstream. Nothing was really noteworthy or cool until Tesla did it, and they made it like driving a new spaceship, essentially, right? Everything just felt different. I think that paved the way for Lucid. I think it paved the way for Rivian, for all these different other startups that wanted to get into the EV game. I think that happened from Tesla. So I still think that the full self drive, some people say it's never going to happen. Some people say it's very close. I think that the robotics, all the different things that they're doing still are at the forefront of what's going on out there. But I don't necessarily want to hold a stock while it's got crosshairs on its back of this thing is just going to get shot down, right? I don't want to be there. So it makes it really hard to hold on to something when you have a high conviction in it and it just seems like it's just going the wrong way. So again, I don't ever want to fall in love with any stock, right? I don't want to just be blindsided by, hey, I'm holding Tesla until the bitter end. I don't care. I've done that before. I've been punished for that before. I'm looking at ChargePoint. I'm looking at Neo, right? Like I'm looking at the ones that have done this to me. I don't want this to happen again. And I know I've come on here and said, look at this low. It's at 120. It ain't going to happen. Or it was even lower probably last time. It was probably 80 or 60. And I'm like, there's no way that Tesla is going to 80. I don't see it. But then you have just this mass panic, mass problems, people just pointing the finger at Elon. And I have to start to question, is it worth riding this thing down? And for me, at that given point in time, it was not, right? So if I go ahead and look at this thing, I do think that this could be something where I want to buy some call options on this thing, basically betting that it's going to go higher than where we are right now. So that's kind of what I'm thinking. Maybe I start to write some call options and see just where this thing goes. And we can maybe get a feel for what's going to happen out here. Oh, I've got two RSIs. So it is showing like we're bullish here. If I'm looking at what chart do I want to look at? I'd have to take a look at that in a second. I can probably pull that up at some point. Upper indicators. Anyhow, Moving averages, that could give us a little bit of guidance. We could probably look at that as well on like a 3 month and see what's going on there. So we are below that's a 13 day. We want to change that. I don't want a 13 day. I want like a 50 day. We are well below the 50 day, which is typically a bearish signal. If we are going to add another upper indicator, if I go ahead and do a simple moving average, do another one, and I'm going to change this to the 200 day. If we go ahead and clear that out and go 200, update that. Why? Oh, there we are. So the 50 day is lower than the 200. So if that crosses, that is not a good thing. We don't want that. We wanted this to be above, right? So that is a decent sign right now, but our price is under both of them. So I don't know. I'd have to take a look at this a little bit more to see exactly where that perfect entry point would be. Maybe it's here, maybe it's not. I'm probably not the perfect person to ask on that, but I'm not normally a trader like that, but it is what it is. We kind of got to do what we got to do to figure out where we want to go from here. So my thought is maybe I write a call option to go ahead and buy these at, I don't know, say 275, 2, 3, 4, and 5 months from now, right? So give it a little bit of time. I think that as the market kind of digests all this Elon news, as a lot of the people, kind of get tired of putting stickers on Teslas or spray painting windows at Tesla dealerships or smashing Cybertrucks, I think we eventually get out of this, right? So I don't know that it's going to stay down forever. I didn't want to see this thing go down to 150, and then I'm like, oh man, I'm way under on this thing. I should have just got out of it. And I did, and now it's come back up, but I mean, everything came back up. So what did I go ahead and buy? Well, I did tell you guys DraftKings, right? I did buy some DraftKings. I was looking at that. I bought some Google. I think Google presents a lot of opportunities for a lot of growth here. Google has also come down pretty significantly from 206 roughly on the 3 month, and now we're sitting at 165. So I bought some Google. I'm very comfortable with that. I bought more Nvidia. Nvidia is trading at a forward PE of like I want to say it was like a 26, 27. Let's go ahead and pull this up. I'm going to pull up Refinitiv and see what the forward on that's 25.8. Nvidia's forward PE is a 25.8, and everyone says how expensive it is. Man, I don't understand what you guys are getting at. I really don't. We got a 5-year return of 1,800%. That is fantastic. This thing, I don't know. I mean, yes, there could be problems. There could be problems with semis and hardware and things like that for sure. But when I'm looking at the price targets, we got about 48% of upside. Earnings are nice and predictable here through 2027. We're at 299 from 25. We're looking at an average of 577 by the end of 2027. So almost a double in 2 years on earnings. I mean, that's fantastic. Revenue, where are we? Revenue is 93% of growth by the end of 2027. And that's not going to necessarily mean that we're going to get 93% of growth on the stock price. I don't think we will. It never happens like that. So it should fall somewhat, less than that. But I am certainly comfortable with being half of that on Nvidia. It is already, I mean, if you've been in for a while, you just saw 1,800% of return in 5 years. I don't know what else you can ask for a company this size. So dividend growth, we're not there for that because that current dividend is nothing. Yeah, they might have upped it to 2 pennies, but there's nothing there. Don't worry about that. Forward PE, 39% discount. So again, you are getting Nvidia on a sale right here, right now, with this 10% pullback, right? We saw this thing close to 150-ish, somewhere around there, and now we got down to like 107. I think we're sitting like 120 right now. So 107 is a sure no problem buy this thing. Forward peg ratio is at a 0.6. Price to sales, a little bit rich, but everything else is showing that the growth is there. So we're paying a little bit more for it on a future, but the current rate means that we are paying a little bit more than we have in the past. However, we're not paying for the future growth of what it's going to do on that forward PE or that forward peg ratio of a 0.6. So currently on the price of sales, it's rich. But if we zoom out, we look at this 5-year forecasted growth rate, we're getting it for a third roughly of what we had been paying for in the past. Guys, sorry, I'm pulling up all this thing on Refinitiv and I didn't even show you the Refinitiv slides. Oh man, I'm sorry. All right, I'm just going to go through it again real quick. Forward pegs down here, 0.6. 5-year is a 1.6. Forward PE is a 25.8. 5-year average is a 42. Price of sales up here is currently at a 20.9, and the 5-year average is 18.8. My fault, guys. Someone shouldn't give me a computer. I don't know what to say. Dividend growth, 112%. We've got, here's my annual revenue numbers. I was looking at 105 billion for 25 and up to 252 billion by 2027. Here's the earnings per share. You could probably screenshot this if you want to come back and look at this thing. Anyhow, that was what I was looking at. Sorry, guys. I didn't mean to, not show you what I was looking at. So, yeah, sorry. I didn't mean to just show you all my position for that long. That was kind of silly. Anyhow, so, and then, just out of comparison, right? Let's take a look at little old Walmart. So, yeah, 26 on Nvidia, right? On that forward. If we look at Refinitiv, I'm going to share this tab. I'm sorry. Forward PE is a 32. So what would you rather have? A Walmart at a forward PE of a 32 or an Nvidia at a forward PE of a 26, right? So if we're looking at this thing, and some people say, well, consumer goods are a safe bet. Well, consumer goods are a safe bet until you throw tariffs in the mix. And now we're paying more for products coming in from China, which is certainly going to affect Walmart. And even if they can make things locally, a lot of the product that they buy is not going to change just simply because Walmart wants to buy it from there. So they're going to be buying TVs from wherever they're buying TVs from. We're not going to automatically just start making them here. So yeah, they got some upside too, right? 29%. Nvidia was more. The gains here, earnings per share on Walmart, were $2.51 in 25. And by the, oh my gosh, go away, pop-ups. By the end of 27, we're only about 43 cents higher at 294. So growing, but not as much as what an Nvidia is. We're paying more for it. We were only getting revenue gains of 3.6 and 8.3. Compare that to Nvidia's 90-something%. We have got, if you're in for the dividend, Walmart's really not anything to write home about at a 1.1% dividend. So we're really not there for that. We've got overvalued on forward, right, at a 29% premium versus Nvidia's, I forget the discount that it was there, but I know it was at a discount. Price to sales is a heck of a lot cheaper at Walmart. It is at a 1 compared to Nvidia's, I forget, 20. 5-year average being a 0.7. And so it's a little bit rich there. Forward PE is a 32. Their 5 years is 24.9. And their forward peg ratio is a 3.5. And remind you, we were paying a 0.6 for Nvidia. So you're paying roughly 6 times more on a forward peg ratio for the growth that you're getting over the next 5 years to buy Walmart right here, right now. And you're getting a 1% dividend yield. I don't really see the draw to go ahead and buy something like a Walmart right here. It's overvalued. And the growth is not that great. So why would we even pile in on something that's going to be in the crosshairs of tariffs when you can buy a better stock that might still have tariff, written on it? But there's some other unknown problems. And if China is going to allow their product, or if U.S. is going to allow China to own the product, but I still think that Nvidia is the better way to go right now. So for me, that is a no-brainer, right? We're buying that one, or I bought that one. What else did I buy? I bought more AMD. I told you guys I was buying at 120, and if it went sub 100, I'd be buying that as well. I did. Realty. I have been adding to this pretty substantially. This was probably one of the ones with, that's debatable. I'm in that one for the dividend, and it's fairly valued, but I know I told you guys that things could get rough there, but I'm counting on this dividend to stay in place. I think it will for at least a while. So DraftKings bought that. Meta bought some more there. So Meta, I still think that this thing could easily be a $700 stock, and we're sitting at 607. I bought it at like 580, and price target being 764. I really think 700 is not a problem for Meta. I think the gains there, advertising, the engagement is through the roof there. Bought more Palantir. I bought this thing sub 80, but now it's sitting at 86. I still think that it is a fair valuation. I've seen YouTube videos telling you that this thing's going to 250 this year. I don't think so. I think we could probably get back to some of our recent highs and test that, and we might break through a little bit, and I think we fall back down, if I'm being completely honest. So I think that 125 is possible. It's just going to depend on timing as to what happens by the end of the year. Citibank, bought that. Nike, bought more there. I know tariff concerns, but I think long term this thing still has. It's definitely in that oversold category for me. So I bought some of that. Lam Research, purchased there, and I understand that there's a lot of different crosshairs on semiconductors and hardware. But man, it is a great company, and I see it as a discount, and I want to buy it. So I think the downside is fairly limited, and I think that I'm comfortable anywhere in that teens growth by the end of the year, and I definitely think we could do that. What else? We bought more Eli Lilly. This thing came down from the mid nines down to around low 800s. So I was buying this one probably 795 to 800 ish. Nvidia, told you that one. Sofi, I probably already alluded to that when we were talking Sofi. So that's kind of what I'm looking at. I bought some more Bitcoin on the ETF side on E-Trade. You could do that through like IBIT or BITO. I think IBIT is at futures. No, IBIT just simply holds Bitcoin. Sorry. Yep. This one just holds Bitcoin. And BITO is going to give you a heck of a dividend. It's an 81% dividend payer, and it trades on futures, right? So I believe it's leveraged, trades bills, Bitcoin strategy, ETF, USD, and more T-bills. So that one gives you a dividend to hold Bitcoin, and they do what they do with it. And I've just been kind of collecting the dividend off of some of those shares. So I've definitely done that. I bought more into the IRA. I want to say I put a little bit of Next Era Energy there. I still like that one. I'm still buying some of those utilities. I think that there's definitely some growth to be had in that space. So 3% yielder there. If you're looking at oil, I still like Enbridge. Enbridge should not get tariffed as they're piping oil in from Canada into the U.S., but the way that it is done, it is not tariffed as a product that is coming in, but rather the piping that Enbridge offers, right? So it's not necessarily the oil, it's the piping service that they offer. They're the midstream. So that is a little bit more protected. CVX is still going to be one of my top plays in that space for just simply an oil and gas major that is giving you about a 4.5% dividend yield. It seems to be a very strong company that I believe is a. What else? What else do we buy? Man, I forget all the things that we bought this week. And you know what? Let's go ahead and look. I don't necessarily want to dive too much in, but let's go and take a look at my IRA and see just what we bought. I don't mind sharing. XYLD, that is the futures ETF. That's another dividend payer. I did add some Tesla here. Viking, told you guys that one. Meta, AMD, more Bitcoin. Civitas, I bought some RA. That's another ETF that actually someone else brought up to me. That is going to be, I think it's Brookfield. Yeah, Brookfield. It is an income ETF as well. So I believe that is going to be doing some futures trading. And they're going to be giving out about 11%, 10.78% monthly. XYLD, if you're in it for the yield, man, that is a S&P covered call ETF. So they're writing covered calls on the shares that they hold, and they're paying out north of 10% on that dividend yield as well. So I have these in my IRA simply to have some of that dividend income protected and not paying through the nose on these dividend incomes. And that's why my high yielders are held within an IRA. So a lot of different things here to digest. But man, the end of the story is I think that the next couple months is going to be rough. I think that we should be buying. I should be buying. My family should be buying. You do what you want to do. I'm going to be buying through this dip. Not going to let this opportunity pass me by and say, man, March 16th, March 17th, 2025, I wasn't buying and I should have been. It was a gift. We didn't look at it like that. And, we got scared. We got scared and we sold it. We ran for the hills. I don't want to do that. So for me, I'm going to take the opportunity. I want to take a look at these stocks and see what really makes sense to me. And like I said, all of these were really stocks that I have high conviction in, or there's a reason that I'm buying them, right? So Google, AMD, Meta, Palantir, Nike, Lam Research, Eli Lilly, Nvidia, Sofi, very, very high conviction that they are going to be better in a year than where they are now. UPS, that's tough, right? They this union contract deal, they've definitely overpaid, right? They're paying more than probably what they should have been, but I think they come out of it. I don't really like FedEx as much as an operator. I'd rather have UPS. I don't know if I mentioned that one. I love the dividend. DraftKings, I got to think that going forward, DraftKings should have a great year. They had a great quarter, great guidance, and I think they had something with raising funding. I think that hurt them. I think a lot of the consumer demand is probably hurting them. The broader market sell-off is hurting them. But I believe that as more and more states legalize, I think that is a better thing for them. If you're more into FanDuel, Flutter's probably your way to go, FLUT, and you got more exposure internationally. So if you're more concerned about a recession, I'd probably go that way. If you're less concerned about that, I think that there's probably a little bit more upside in DraftKings. So that's my 2 cents there. Citi, I still like it for the dividend. I think it's definitely one of the bank stocks that I like here. I was actually listening to Kramer the other day, and he's always a Wells Fargo guy. But now he says any fintech except Wells Fargo. So again, he just flip-flops back and forth. I've never really been a Wells Fargo guy. I've never owned it, I don't think. Maybe I traded it for a brief time, but maybe. I don't even know if I did that. But that's what I got. That was my list from this week. What are we going to buy for the investing challenge? I'm still doing that. We're still going through. I'm putting $200 worth of my money in every single week. This last week, I forget what I even bought. Was it Lilly? It was probably Lilly because it had sold off. CrowdStrike, I don't know. Let's go ahead and do this. Let's pull it back up. Let's see what we want to share here. Let's go ahead and pull up this page that we were currently on. I think Nvidia makes a lot of sense. Nvidia is at a 120. Could we buy that tomorrow? Sure. Tesla, do we want to buy that tomorrow? Man, Meta makes sense. Amazon makes sense. I think you can't really go wrong with any of those. Tesla, maybe you can go wrong there. Eli Lilly, that's not the right ticker. What am I doing here? AMZN. That looked like a bull play on Amazon. 35 times trailing on Amazon. We got, I don't know. I really like AMD. I really like Nvidia. I really like Meta. I like Amazon. I like Lilly. I bought Next Era. CrowdStrike, that's probably a little controversial right now. That's come way back up. Do I want to buy Costco? Costco is probably our safest bet, but I don't know that I want to be safe after a 10% correction. Maybe we can throw some money at something and see if it works. What's Costco going to do as far as upside? Let's 21.6%. Let's take a look. Let's run through them. AMZN 36. We got Nvidia at, I think it was about the same. Oh, that's 45. Sorry, guys. You would think I'd know these a little bit better by now. Meta 25. I do like Meta. LLY. Let's take a look there, and then I'm gonna look at AMD, and then I'll get out of here because I got to get going myself. 27% on Lilly. AMD 46. Man, that is tough. I just bought Lilly, so maybe we hold off on that. Then if we're looking at just gains here, Nvidia at 40 some percent, AMD at 46%. Tesla, I'm going to cross off. Meta's at 25. Man, what do we want to go with? I think maybe I'll just throw some money at Nvidia this week. Maybe that's the way we go. You know what makes it hard is the fact that I think all of them can be bought. All of them can be bought for me. So if I got $200 to spend, yeah, I can buy partial shares, but what am I going to do? Spend $40 on each? I think you could, but I think for me, I just want to go in on one of them. You could easily continue just to buy 50, $100 of each every week or every month or whatever you want to do. But I think I'm going with Nvidia. I think even on that low end, I think this gives us a lot of protection, right? That low price target is at a 130. I think people are going to be in there buying this one with us. Meta, do we have any low side protection? Very little. Amazon low side protection. So Nvidia has given us the most there. AMD 8%. But AMD sold off the most recently. Maybe, man, yeah, I'm gonna go Nvidia. That's where I'm gonna go. We're gonna do that one. So Nvidia, that was a long talk. Listening to me figure out what I want to do here, but Nvidia is going to be the play for our St. Patrick's Day. We're gonna sign off with that, guys. Thank you very much for stopping by. I will catch you guys in the next one. Hopefully you have a safe and happy St. Patrick's Day to everyone that celebrates, and I will catch you guys in the next one. Take care.